Hi everyone and welcome back to Stephan Livera podcast brought to you by Bold. American listeners, you can buy Bitcoin over at Bold Bitcoin for the best or lowest rates, and you can also get sats back using the Bold debit card. Rejoining me on the show today is Max K. Max is the CEO and founder of Debifi, and he's also involved with Baltic Honey Badger. Max, welcome back to the show.
Thank you for having me. Pleasure to be back, Stephan. And I was happy actually to see you 2 weeks ago at the Baltic Honey Badger. So it was a pleasure.
I mean, we should chat about that. I mean, I thought it was a great experience, great chance to understand what's going on. At least from my perspective, I like to sort of keep my ear to the ground to sort of understand what's going on with different projects. So there was a lot going on there. What were the highlights and big updates that you found at Baltic Honey Badger this year, 2025?
Well, I think that even, all the conferences before Baltic Honey Badger this year, most of them were talking about, institutional adoption and Bitcoin treasury companies. And we just, we at some point, we just figured out that maybe people are kind of tired of this topic. Everyone is talking about Bitcoin treasury companies, et cetera, et cetera. Nothing bad about that. I fully support the institutional adoption side, but we were thinking maybe people are a bit tired. We need to change the topics and the agenda a bit. We had some content about Bitcoin treasury companies, but we ended up actually talking on panels that wasn't even about treasury companies. Still, people were bringing that topic up. And, even Baltic Honey Badger, which is like OG, very cyberpunkish type of conference, even we weren't able to ignore that thing about, public companies adopting Bitcoin, and also not public companies adopting Bitcoin as a treasury asset. I would say that was not a highlight, but definitely a topic that we weren't expecting that it will be so popular, even among people that you think that they're far from any type of institutional thing. But for me, one of the biggest revelation was Ark, which is a new thing by Ark, obviously by Ark team. There are several teams that working on this implementation, because Honey Badger was always a sandbox for a lot of different initiatives. Like, we were the first conference that adopted the option to pay with this amazing cards. Just top. I don't know whether
the Bolt cards.
Bolt cards. So we were the first conference that actually tested out everything properly, and now like almost every big conference has this thing. You can just top up with the card and make a payment. That was really neat back. I think it was 2020 or 2023. And this year we were the first who actually did. All our merchants were accepting Lightning payments through Ark, and it was so seamless. So even
people didn't even notice, right?
Yeah, even I didn't realize this until the last day, when in evening I went to buy some food for myself, and then I realized, oh, okay, that's actually Ark. It's working there, and I guess there will be a use case because the guys put a lot of efforts, and I just want to say a huge shout out to everyone who was involved, especially Cooks, who is like force behind this stuff. So, but yeah, that was the revelation for me. It's very exciting, and nothing crashed. It was working seamlessly. So for me, from the perspective of the conference, Ark was the big revelation. Honestly, it's so promising, and I'm very excited about that because it just opens a lot of different ways how you can finally, properly, as a builder, as a developer, work with the Lightning, and they're building a very amazing tool, and hopefully everything that they declare will come true. I'm like fingers crossed.
Yeah, this is really cool. Tiero and Cooks and the guys over at Ark Labs, they're doing something really interesting. So I'll just quickly explain, just for listeners, make sure everyone's following along. So you might be familiar with like buying, you might have seen some videos of like whatever, an influencer going and buying something online and paying with their Lightning wallet. And this is similar to that, but actually in the background, they were using Ark. And so because Cooks came also from the world of BTC Pay Server, which is also a merchant payment processing platform. And so what, as I understand, they had set up is they had these merchants with BTC Pay, but it was Ark in the background. And so when you went to pay, you either had the option of Lightning or just directly paying with Ark. And so you could scan a QR, and on the front to the end user, to you and I buying our coffees and our food, you could pay with Lightning. But the cool thing is, actually in the background, I believe it was Bolts.exchange who were doing like a swap in the background. And so what's happening is that merchant is, so it's the end user is paying in Lightning, it's being swapped into Ark, a VTXO, a virtual transaction output, and then later that merchant, that merchant can just have a very simple, arcade wallet, send sats, receive sats experience, and when they want to batch out, they can sort of batch out all of their payments, out all of their VTXOs into Bitcoin main chain UTXOs. So that was really interesting, and as you said, this is like, we're starting to see, let's say, quote unquote, real production L2s other than Lightning, right? Because for so long, it's just been kind of a Lightning is the only truly, production ready L2 that's, actually, yeah.
I mean, I wouldn't say so. There's also Liquid, which you can argue whether it's L2 or it's a side chain or whatever. But I mean, Liquid been there for years, and it's really amazing because we've been working with Liquid. I mean, mostly on the level of that. For example, in Debifi, you can borrow using a Liquid Tether, and it just works really nice, and people are really enjoying it. But overall, yeah, Ark. My case with Ark is that at least it looks promising from the perspective of building different tools on top of Ark, and then these tools will be compatible with Lightning. That was a huge problem, because Lightning is perfect for payments. I totally agree with that. I mean, whatever you want to buy on the conference, outside of the conference, Lightning is just perfect for that. But in terms of building different type of financial tools on top of that, whether we're talking about trading, lending, I don't know, whatever, Lightning wasn't perfect, and you couldn't build a lot of interesting stuff on top of that. Finally, I hope Ark will bring to the table that Lightning will become a proper, tool to build some cool stuff on top of that.
Yeah. So yeah, I mean, I see it like we're seeing this further exploration and maturation of other L2s, let's say, and I guess depending on whether you count Liquid or not, you would say. Yeah, but there's a bunch of these now. So you've got Lightning, there's Liquid, there's Ark, there's people doing like eCash things with Cashew or Fedimint, there's Spark as well. So there's all these different things. And of course, there are people even over in ZK Rollup land. People are trying to do things on that side as well. So we've spoken a bit about Baltic Honey Badger. Let's give just a quick overview for people who aren't familiar with Debifi. What is the main product? As I understand, it's multi-sig collateralized lending against your Bitcoin, and you can get stable coins or fiat in the bank account, borrowing against your coins. So can you just give a quick overview? What is the model with Debifi?
Yeah, so basically we adopted the already existing model from retail space, peer-to-peer. And basically the idea of Debifi is that we want to bridge institutional liquidity providers, also from TradeFi space like banks and hedge funds and other like regulated or non-regulated entities, but those who are not regulated, they are allowed to issue loans. And we want to bridge these liquidity providers with Bitcoiners across the globe. So we onboard from one side different type of institutional lenders. It's only institutional lenders that operates on Debifi. And on the other side, we bring borrowers, both private individuals and corporates. So it's like, I like to explain it in simple terms. It's like eBay for Bitcoin loans. It's Debifi is just a technical infrastructure provider. So we're just building this marketplace. It's effectively a marketplace of liquidity for Bitcoin-backed lending. And every time borrower and lender engage in a contract, they create together multi-sig. on the public Bitcoin blockchain. So it's like fully transparent. We don't have any wallets. We don't store any funds. They create it with their own keys. Currently, we have a model by default, which is 3 out of 4. So it's like 4 keys to this multi-sig. 1 key goes to Debifi, 1 goes to lender, 1 key goes to borrower, and 1 key goes to independent authorized key holder, which is an independent entity that holds a backup key. And you can only move collateral from the escrow by having majority of the keys, which is three keys at least. So then you have a multi-sig, then borrower deposits collateral in form of Bitcoin, only Bitcoin, we work only with Bitcoin, to that multi-sig, and then lender sends either stable coins, if it's a stable coin based offer, or it could be also fiat if it's a fiat based offer. And we provide lenders with all the necessary infrastructure, including like loan portfolio management. You can set up your terms. KYC, KYB will like connect you to our KYC, KYB model, so you can gather all the necessary information. So it's basically it's institutional grade platform that allows any liquidity provider who doesn't have any technical expertise in building complicated and highly secure environments with Bitcoin to start operating on the Bitcoin-backed market.
Excellent. And so, yeah, so I guess in simple terms, this is the Bitcoin collateralized lending market for, let's say, larger dollar amounts. So what are the thresholds that you're working with here?
We have actually the minimum size is 25,000
okay,
for a
gotcha.
loan. But we have some lenders who asked us, like, can we go a bit lower? So you can borrow also lower amounts. And we're also going to launch pretty soon an infrastructure that will allow you to take microloans from different lenders in the form of payment card.
Gotcha. Okay, so then it doesn't necessarily have to be large loans. Okay, fair enough.
Yeah, it could be. Yeah. It could be just like $500 up to 1,000. For now, it's going to be like micro lending site will be from 500 to up to 1,000. We're partnering with the Bitcoin company, so you will get your loan in form of prepaid card directly to your mobile phone, and all the user experience and all the path from onboarding and getting the loan will be through a mobile phone, so you can do it on the go, because Debifi also has an app, so it's an app plus website.
Yeah. Okay. And so, then, in terms of the loan term, can you explain a bit about that? Like, is it like a 1-year loan term, or how does that work? What's the threshold there?
At the moment, you're getting some very, very interesting information from me with your questions, because we didn't announce it yet, but I guess I'm going to use your podcast to announce. So,
all right, it's a scoop.
At the moment, I already did mention the cards. So we're launching the public beta basically next week. And as for the duration of the loans, currently it's up to 12 months, but in September it's going to be 24 months. But you need to understand that we have different lenders, and it's up to lender. It's an open market. I mean, so
you have to find a counterparty. You have to find someone who's willing to do the opposite.
Yes. If most of the lender will say no, I'm fine with like shorter terms, then we cannot do about anything about that. We just have a functionality in the feature that will allow you to issue loans up to 24 months. If there will be lenders who will like to use that feature, fine. If no, sorry, the market decided differently. I mean, we cannot, we don't touch the cash flow. We just provide technical infrastructure. As long as they're like liquidity providers who are happy with 24-month loan duration, fine, let it be.
Yeah. Okay, great. And so I am curious, and I'm sure listeners will want to know, now, as you said, it's a market, but what's like roughly the ranges that we're working with here for borrowing against Bitcoin? Like, how much are people paying on the borrower side to borrow against their Bitcoin?
So the average interest rate on the market across most of the platforms, like a consensus interest rate, I would say, is like 12% at the moment.
Yeah.
I mean, there's like some platforms that use this like level system. You borrow more, you pay a bit less, but it's like some of them just like crazy figures. You borrow from 5 million, from 10 million, then you're gonna get like cheaper interest rate. But most of the borrowing is happening in the range between, I would say, 10,000 up to 200, 300,000. When I say most, I'm meaning on the market. It's not on particular on Debifi. And in that rate, most of the loan sizes most of the interest rates are around 12%. So 12% is the average interest rate at the moment on the market. You can go, by the way, we briefly talked with you about Zone 21 website. I'm sure we're going to touch base on that, but you can go on that website or follow them on Twitter, and you can see that they're like updating the interest rate across the board of different lending protocols and platforms. And it's actually true. I'm not making these numbers up. The good thing is that Debifi onboards more and more lenders, and we onboard more and more lenders from TradeFi space who are closer to like cheap capital and closer to like cheap capital markets. And we already see that there has been some private loans issued with single digit interest rate. Like the best interest rate that we saw in our marketplace was 9%. It was in Swiss francs, which is like, still it's different currency than most of the loan, because the main currency for the lending business is USD yet still. And but it was single digit loan, and it was a good amount of money. It wasn't like super high. It wasn't like millions. We were talking about thousands, tens of thousands. So I mean, we are moving in that direction. I guess next year, if market gonna develop as it has been developing, we're gonna touch on like single digit loan size, or like low double digit, like 10%, something like that. Because a year ago it was actually 16%, and you still can, if you will go to peer-to-peer marketplaces, you still can see that some of the interest rate are above 40%. It's like 15, 16%. So, I mean, as cost of capital will go lower, as more and more liquidity will go into the market, we'll see that rates are dropping. But it's not gonna like a lot of people who are not familiar with the space, and a lot of Bitcoiners, no offense, but they say like, it's a pristine super collateral. You should give me a loan with almost zero interest rate. And I mean, it's strange because
The lead sponsor of this show is Bold, the banking platform designed for Bitcoiners. With the Bold virtual Visa debit card, you earn Bitcoin back on every purchase. The more Bitcoin you buy with Bold, the more sats back you get on the card. Buy $2,500 of Bitcoin and earn 3% sats back. Keep stacking with Bold to earn up to 10% sats back. Bold offers the industry's lowest fees on Bitcoin buys and sells with zero added spreads. When starting out, you can use Bold Wallet, which is managed by the team, but Bold is also supporting self-custody with Bold Vault, a 2 of 3 collaborative custody multi-sig for zero monthly fees. With Bold, you get your own FDIC-insured checking account to store and send fiat, pay bills, direct deposit your paycheck, and replace your legacy fiat bank. Sign up today and get zero fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Go to getbold.io. This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices, and level up your self-custody today.
Most of the lenders in the Bitcoin lending market, they're actually Bitcoiners, and they understand the value proposition of Bitcoin. So for them, it's always, should I just buy Bitcoin, or should I issue a loan in fiat? And I mean, it's always tricky. And they also know that you are a Bitcoiner. You don't want to sell your Bitcoin, and most probably you're going to overpay for opportunity not to sell it. So it's a double-edged sword in a way that there's not only borrowers who decide. It's an open market, and this is what we're proving with Debifi. You go on Debifi and you see like what market perception is across the board of different lenders, what kind of rates you should get at this point. I mean, it's going lower definitely, but it's not going to happen that it's going to be cheaper than mortgage rate at some point. I think it's going to be like, if in next 5 years we're going to see like 6%, 5% Bitcoin back lending rates, then I would say we're highly successful with that.
I think one under-discussed component of that is that effectively a lot of what people are used to today with fiat credit is it's government subsidized, right? Like that's just the bottom line. It's government subsidized. And so if you're having to interact with a person who would otherwise be able to buy Bitcoin with that money, it's going to be a tough sell for them to give, because think about what they're giving up if you are on the lender side of the house here, and you are already somewhat Bitcoin savvy, you have to think, how much am I going to charge this guy, the borrower, for him to use my fiat that I have, hypothetically, and for me to not buy Bitcoin with that. And also, our friend Matthew Mazinskis, who spoke at Baltic Honey Badger, he does these base money reports. And oftentimes, if you look at how much base money is expanding, it's like 10 or 12% per year, right? Yeah. That's how much fiat is expanding. So it's kind of like, actually, when you think about it, if fiat is expanding at 12% per year and someone's lending you at 12% a year, it's almost like, net.
I mean, Bitcoin-backed lending is definitely a part of portfolio strategy for most of the liquidity providers. They still have Bitcoin, but they prefer also, because effectively what Bitcoin-backed lending is, especially over-collateralized Bitcoin-backed lending, it could be considered as a basically Bitcoin bond. It's something that is backed by this hard asset, which is Bitcoin. It's over-collateralized, meaning that even if your borrower will fail to repay, you will get his collateral in any way. And it just pays you a coupon every year. Like imagine you're taking a loan you're a lender, you're providing a loan for, let's say, 2 years with 10% interest rate. So your coupon effectively is 10% per year. Plus you're over collateralized. It's actually even better than the bond, because bond is government bond is like you trust in that this particular government of this country, or if it's a corporate bond, that this particular management team will be able to return you on your investment and not fail, which couldn't be true at some point. We see what happened with Argentina, with Greece, a lot of these countries. And Bitcoin-backed lending, the good thing about it is for the lender, it's also a win-win because it's always backed and over-collateralized by Bitcoin. And Bitcoin is the best asset in the world you can have. And there's multiple reasons, but one of the most important reasons that it's 24/7 tradable, meaning that if your borrower gets liquidated, you can sell the collateral and cash out right into the money. Depends on what you call the money, of course, but you can cash out right into the money any time of the year, any hour of the day, basically, because markets are so liquid and they're getting more and more efficient. So it's a perfect collateral and a perfect opportunity to earn extra, because I see those conventional lenders who are trying to lend out money get a bit more margin, and they're lending out money against operational businesses or even non-collateralized loan with 30% risk premium, and a lot of them are actually failing because that's the general failure of the system, printed money. And with Bitcoin, there's such an amazing opportunity. You can get double-digit returns, super over-collateralized, with a perfect asset in the world, and a lot of TradeFi guys are sleeping on that. But I think it's the narrative is shifting, especially with BlackRock and with ETF and with all these treasury companies coming to the market. I mean, there's more and more demand for Bitcoin-backed lending, and they're waking up to that opportunity.
Right, and I think you're right, because ultimately there are so many fiat investors who are just getting wrecked in bonds today, right? And
Yeah.
so sometimes I get a bit, it's like I see a lot of hand wringing inside of the Bitcoin, let's say in our little echo chamber of Bitcoin maxis, where people are kind of hand wringing about, oh my gosh, this treasury company, this or this, whatever thing, why don't people just go and buy Bitcoin? But you got to understand, like there's just a lot of capital that is
Yeah.
extremely conservative, not willing to just go buy Bitcoin. They're just not willing to go and do these things. And so if they can just get something, right? If they can come on, let's say now we're speaking on the lender side of the house here. If they, as a fiat, denominated person, could just come to these platforms and put some fiat on this and be earning, like you said, 12% or maybe a little bit higher, 12 to 15%, that's absolutely killing what they're earning currently.
Yeah.
So I think that there's just a big disconnect there.
Yeah, I mean, with treasury companies, a lot of people doesn't understand that it's a good way to get Bitcoin exposure for a lot of TradeFi companies and a lot of funds and a lot of, pension funds, because in their like rules, it's written, in some of them, like you cannot be exposed directly to Bitcoin or to like volatile assets. You need to be very conservative. And for them, like buying some MicroStrategy or strategy shares or other Metaplanet shares or BlackRock ETF is a way to how to get exposure to the Bitcoin, because they're like board, or those who made those rules are very like old school thinking, and they don't believe in Bitcoin. So it's like it's a good way to kind of orange peel to some extent largest capital providers in the world. Like there was a news I think 2 days ago that largest pension fund, largest state fund in the world, which is a Norwegian state fund, they just increased their exposure to, I think it was Metaplanet and Strategy, both of them, or BlackRock ETF. I missed on that, but they're almost doubled the amount that they invested. So I mean, I'm happy for that, because obviously that means like adoption is growing.
Yeah, and I think that's exactly it. Like we need to zoom out a bit, because honestly, there are some people who are so caught up in like the echo chamber, or I think it's like the theory of mind thing, right? Like if you don't model other people's mind correctly, you might just think, oh, hey, everyone should just buy Bitcoin, and it's just so obvious. Well, yes, people should all be buying and hodling Bitcoin, but they won't, not yet. And we're maxis. We want as many people to adopt Bitcoin as possible. And I see this is like you're structuring things in a way that you're helping some of these. And that's why I'm, generally speaking, I'm bullish on the treasury companies, and I'm bullish on, Bitcoin lending, and I'm bullish on just Bitcoin for medium of exchange, right? I'm just bullish on all of these things. I want more people to use Bitcoin in whatever way is possible. Now, of course, not your keys, not your coins. We want as many people to learn about self-custody, but there's an on-ramp for these things, and people don't all come in the perfect, let's say, purity signaling or purity spiraling way. So that's where I see it. And I think if you could explain a little bit on the lender side, what are some of the hurdles or mental blocks that you sort of see, or if you're out presenting the platform Debifi to them, what are the main objections that they are throwing to you and saying, oh, I'm not sure about it, or I'm not ready for this yet, or maybe maybe their investors are not comfortable with them doing this yet?
Yeah. So I mean, it's not about the core value proposition, Bitcoin back lending. It's more about, for some of them, it's more about self-custody or collaborative custody. This is our path. It's harder than building a custodial solution, definitely. So what we say to them is that you're gonna hold one of the keys. You're gonna self-custody one of your keys. Yes, we're building infrastructure for that, so you can do it very easy. We're gonna announce some big integrations also very soon that will allow basically any institution in the world to hold the key to the Debifi escrow through solutions that they prefer in their day-to-day operations. But it's still a hurdle in a way, as self-custody for most of the people is still a hurdle, and it's a path. And we knew when we started, we knew that it's going to be hard on the educational side, but it's actually, surprisingly, it's easier than we expected. So for now, a lot of new entrants who want to enter into Bitcoin lending space, they want to do like, okay, I want to custody all the collaterals in my in my custody or in my third party custodian that is like there's big names out there. I'm not going to name them, but and for them the concept of the multi-sig is a bit new. So I would probably say that that's the most challenging part of our offering. We're making it way more simpler than it was, and like again, by the end of the year, it will be very simple to hold your key to the collateral. But that's also, we cannot compromise on that, because on the other side we have borrowers who are Bitcoiners and they value multi-sig approach because of what happened with BlockFi, Celsius, FTX. They don't like the custody. And the case with Debifi is that it's like gradually then suddenly we have on the pipeline a lot of interesting liquidity providers, very traditional, who are gonna be onboarded in next like 3 to 6 months, and it's gonna be like kind of, I expect it's gonna be a small revolution in like TradeFi world because of the partnership that we're gonna announce. And the case is that it's going to be just easier and easier for them to self-custody, and that's the service we want to provide, and that's the service we want to provide to borrowers, to Bitcoiners, because we want to onboard this institution to the proper way of doing the Bitcoin lending. And the proper way from our perspective is a multi-sig, because if you will look at the history of Bitcoin-backed lending, the project that easily survived the wave of bankruptcies that was happening in 2020 or 2022. I don't remember when the BlockFi Celsius.
2022, yeah. So like that FTX bottom was kind of late 2022.
Yeah. These were the projects that they were using multi-sig. It was like basically Unchained and HODL, no issues at all. And this is what we're preaching, and we're trying to move to the market. And I expect that as soon as we're going to complete some of the features that we're building at the moment, and as soon as we're going to onboard some of the liquidity providers that have even cheaper cost of capital than those who operates the custodial lending platform, it will be no-brainer for most of the Bitcoiners and most of the TradeFi companies how to operate on the market. Because effectively, if you can get the same rate, but the security is like 10x better, what's the purpose of using custodial lending platform? Maybe for some micro lending and microloans, there is a purpose, because it could be faster and like seamless, or maybe as a first loan, just as the first buy you do through Coinbase or Binance or Kraken. A lot of people just onboard through these custodial services. But then when you will have to borrow a significant amount, and you'll have to lock a significant amount of your Bitcoin into collateral, you're going to think twice whether I want to trust with my Bitcoin to the third-party custody provider, or I want to make it the collaborative custody and hold one of the keys to the escrow.
Yeah, so I mean, I think I think that really is the trade-off, that we're going to see this competition between the quote-unquote TradFi style, maybe arguably the Trust Me Bro style of lending, versus the more DeFi, on-chain, multi-sig style. And okay, maybe there's other styles, but let's say the closer to self-custody, even though it's kind of hybrid.
I don't like the DeFi, DeFi thing.
Right, and the word is a bit triggering, let's say.
Yeah, it's just triggers me as a maxi, but kind of more, I would say, custodial versus non-custodial. That's the proper way to frame it. And I think that if you look at the trading business, definitely custodial trading will be most probably for the next 5 to 10 years will be the bigger part of the trading volumes in a Bitcoin space, because traders, they just need the fast execution frequency. They cannot afford themselves lose seconds when something is happening. But with the lending, you usually borrow for a longer time period.
Right. So it doesn't matter as much.
doesn't matter as much. What matters in lending is how safe is your collateral. A lot of people, they neglect that. They think that, hey, there's like a shiny, nice thing, or their whole, they're like, they have a proof of reserve, which is a good way and a step forward, the new thing, proof of reserve. But actually what proof of reserve proves is that your Bitcoin, you send Bitcoin to a particular address and it's there in that address. It doesn't prove how keys to this address been managed, who owns the keys to this address, etc., etc. It's actually still trust me, bro, as you said, and yeah, a lot of entities are regulated, highly licensed, everything like that. And I think that both custodial lending and non-custodial lending will have a place and space in the market because the market is just big and it's going to be bigger. But I think if we're going to talk about large volume loans, and we see that from our perspective, and like companies, Bitcoin companies borrowing, I would say it's probably going to shift the narrative significantly towards the non-custodial lending. Because if Bitcoin company is coming to us, whether it's a mining company or it's hardware company or something like that, one of the reasons why they're coming to us, they're saying, we want to use multi-sig. We're either borrowing through multi-sig or we're not borrowing at all. And we don't care what kind of license, brand, and custody provider or custody solution you have. As long as it's not transparent as it is with Debifi, open sourced, fully transparent, you can always verify through any blockchain explorer, we're not using it.
Gotcha. So there'll be those users who are more security conscious and they'll be more interested in this kind of thing. Now, I guess just to kind of throw an example at you, and I'm curious to hear how you think about this, because if we think about today, where is a lot of the wealth, right? It's typically TradFi boomers, right? They've got their stockbroking app, and that's where probably the boomers are holding a lot of their wealth today. And they might like, for example, all the integrations together, right? Like, because they're used to kind of having maybe a private banker who they can call up or email, and they want it all in one, because they want to borrow against it. And then let's say have like, a physical card that they can use to kind of borrow some, and then use to spend, right? To off ramp. Or they might want to be able to quickly trade around to different, to borrow against, as an example, maybe they want to borrow against some Bitcoin, get some fiat, and then buy Strategy or Metaplanet, right? As an example. Yeah. So maybe that's also a competitive dynamic of like, there'll be kind of the one-stop shop, go to this service and we can kind of give you everything. But the trade-off is it's a little more trust me, bro, on the custody side of things compared to the more secure, let's say, model where you can hold one of the keys. And so how would you compare, those different visions of products and services?
Yeah, but it's like you can build everything that you just explained with the multisig, and it could be as seamless as what you just explained. I mean, we're moving in that direction with Debifi as well. I mean, it's going to be about lending, but we can add different features as well. You borrow against your stack, then maybe you want to just instantly buy more Bitcoin and hold it in like multisig custody. You can build everything with multisig. It's just harder, a lot of founders, they're choosing the easier way, which I cannot blame them, honestly. Maybe I'm just, stubborn and crazy in a way. If I would do it like custodial way, it would be way more easier.
Much simpler from your perspective, but of course, yeah. But I mean, of course, maybe less secure, maybe less verifiable, and kind of less, let's say, quote unquote, cypherpunk Bitcoiner ethos, let's say. Is to kind of make it more, at least closer to the non-custodial side of things, even if it's not 100%, right? Because obviously you're holding one, not four keys, but that's fair enough because the lender wants some assurance on his side that like the borrower is not just going to like run away with the money, obviously. So it's kind of, I would say it's closer to non-custodial, though not fully non-custodial for fair reasons. Is how I understand it. But yeah, like you said, we are going to see, I think, these kind of clashing worlds in a way of like, there'll be the trust me bro model of like, hey, just custodial, everything in one app and whatever. And then there'll be sort of the more multi-sig style vision, and maybe in a liquid world, like, okay, the idea is we're using Bitcoin as the main chain and Liquid is a side chain, a federated side chain. And And inside of Liquid, people can do things there too, right? They can as an example, they could get Liquid Tether and then instantly buy Liquid Bitcoin with that. Or they could instantly flip to, even if they want to do all the treasury company stuff, like what Adam Back is doing, instantly buy, CMSTR or like these tokenized forms of Strategy or Metaplanet or these different treasury companies. So these things will exist, but just in different formats. And people just have to learn how to, let's say, traverse these different worlds, right?
I think the case is that with non-custodial service also that not many people and participants in the market understand that as price of Bitcoin will grow, there will be two main reasons why people wants to borrow through non-custodial services. Number one is that generally you don't want to sell when you see that your Bitcoin that you hold for like 5 years is growing, I don't know, 3x,
like 9x or something or whatever, yeah.
Yeah, you don't want to sell. So what do you do? How you derive utility from your stash and from your stack? How you do that? You're gonna go and borrow against that, obviously. And the second thing, as price will grow, you will be more risk aware and you will be more paranoid in a way. Should I actually send my Bitcoin to this custody or to this exchange or to this service provider? Or I can make another path, I can just send it to the multi-sig, which I can verify, and I can hold my keys on a cold card, which we with Debifi support at the moment, and there will be more hardware wallets integrated. And I can create this multiple security layers. And it's a collaborative custody, meaning there's like institutional custody players involved. And the second player is also institution, which is a lender. So you will be more like risk cautious. So as the price will grow, I envision there will be more demand for Bitcoin-backed lending, and there will be way more demand for non-custodial Bitcoin-backed lending. Of course, it always goes with UI and UX and the experience. As you said, I want to have everything in one place. But it's possible to build trading, custody, lending in one app through multi-sig. It's a no-brainer. It just takes a bit more time and a bit more effort, but eventually, that type of project I envision, they're like built for years and centuries upfront, because they're like, it's hard to scale this stuff, but when you scale it, it just goes and grows by itself. It's like self-fulfilling, stuff that just goes.
Yeah, gotcha. And so, yeah, I think we've spoken about, the reasons why people do these things. So on the lender side, right, obviously if they've got some fiat allocation, either they're a no-coiner or they're a Bitcoiner who has some fiat allocation, and they would like to earn some yield out of that by being on the lending side of the house. Now let's talk about the borrower side of the house. Now you touched on this. Probably for many people, they've built up a Bitcoin stack over some time. They would rather either not pay capital gains taxes and or maintain exposure to Bitcoin, so they would rather borrow against it. So as long as they can get a decent, rate and a decent terms, this kind of thing. And then maybe there are some other people who maybe they have other commercial projects that they would like to do. So they want to borrow against some Bitcoin, get some fiat, use that fiat for those commercial projects. And maybe for some of those people, they want to do Bitcoin mining. For some people, they want to invest in Bitcoin treasury companies. For other people, it's, just some other, fiat, totally unrelated to Bitcoin business. What are you seeing? Or some people, they want to go long Bitcoin, right? They want to borrow against their Bitcoin, get some fiat, and then buy Bitcoin. Because obviously they love Bitcoin, they want to, go long Bitcoin. What are the uses that you are seeing? Is it mainly those other uses that you would see on the borrowing side of the house?
I mean, the use cases and the users on the borrowing side are, for private individuals, mostly to, buy more Bitcoin, which is not
Fair enough.
surprising.
Yeah.
So effectively, you're just leveraging through multi-sig. It's a safe way to do the leverage. Again, there's no custody risk or significantly decreased custody risk. So that's number one. Number two, and again, I'm putting number one, number two, not in terms of priority, just use cases. It's not like the buying more Bitcoin is the most obvious and popular case, but it's like very popular. Then some expenses, just life expenses. I don't want to. I'm relocating. I'm buying a house. I don't know. I want to buy some stuff, and I don't want to sell. I have in 12 months. I expect that either the price of Bitcoin will grow, and I can just cover, part of my loan with the Bitcoin price difference, or I don't know. I expect that I'm going to have different resources of my cash flow, and I will be able to pay back my loan. Another important feature to consider is that actually, when you sell Bitcoin in most of the countries, it's a subject to capital gain tax. So when you borrow in most of the countries, you are not paying the capital gain tax. So that's effectively avoiding the capital gain tax in a lot of countries.
So I guess you can think of it like, instead of paying 20, 30, 40% capital gains tax, I'd rather pay 12% interest. Kind of, loosely speaking.
Pay 12%. Yeah, I'll pay 12% interest, and I'm gonna keep my Bitcoin. That's probably worth of 100% more. But for the corporates, it's usually very simple. There's two use cases again. We've been approached by some treasury companies and some companies also that have private treasury. And obviously, they also don't want to sell, but they want to cover their operational costs. That's number one reason. So it's like operational costs. I don't want to sell my Bitcoin. We have like certain amount of Bitcoin on the balance sheet, and we just want to borrow against that. Then there's like business expansion. We're launching the new product line, or we are going into the new market. We want to borrow against our Bitcoin and again expand. And with treasuries companies, some of the treasury companies, they don't have opportunity to borrow that easily on the public markets. Either they're new or they don't have these capabilities yet. And then what they do, they don't want to sell Bitcoin because that's basically the promise that they're delivering to the market. We're not selling. We're keeping Bitcoin on the balance sheet. How they can buy more? Obviously, they can borrow against their Bitcoin and get a loan and buy more Bitcoin, and with that increase the amount of Bitcoin in the treasuries.
Gotcha. Yeah. Now, of course, people should be aware about things like LTV and also like liquidation and margin calls and things like this. So can you just explain a bit about like what are the typical thresholds that you use? Do people modify that, or is it just like a set LTV and a liquidation?
We have currently we have a default LTV liquidation rate 90%. So the LTV you can use to borrow for fiat, it's 50% default by default. So in order to borrow, let's say 5 million worth of BTC, you need to put 10 million worth of BTC.
Yeah.
And for stable coins, it's from 30 to 70%, meaning that you can borrow against 10 million and you can borrow anything in the range of 3 million to 7 million. But we are going to release a new feature pretty much soon where every lender will be able to put their own like LTV and margin call levels. So it's not going to be like fixed. You can,
Gotcha.
You will be.
It's very like manual. They can set what they like. Yeah.
Yeah, they can set any term. So, some lenders might say, okay, we're not going to liquidate Bitcoin at all. We have some capacity to withstand any type of volatility, and we're going to liquidate at 95%, which is really high liquidation rate, right?
Yeah.
Some of them will say, we want to liquidate in fiat, or we want to liquidate in stablecoin. We want to have like more room for volatility, and we're going to liquidate at 80% or 85%.
Yeah.
So it's up to lender. It will be up to lender to decide how they want to build the margin call system and the liquidation system. And then it's up to borrower to go out and decide like whether I'm fine with this offer or I want to have this offer.
Yeah.
And also with multi-sig, it's not happening like automatically. That's the good thing for the borrowers, because at the moment it's like some of the processes are automatic and some of them are still like, requires the double checking and signing from involved parties, the release of collateral in favor of the lender in case of liquidation. And what we're going to released pretty much soon as well. There was demand from few of the lenders, is that there will be a feature which will be called delayed liquidation, which means that even if you're liquidated, you will still have like 24 hours or maybe even 48 hours to negotiate with the lender that, I mean, I don't know, I was sleeping, I was flying, I don't know, I was in the woods and I missed the price action, so maybe I can repay you in part, repay fully, or maybe add a bit more to collateral. So you will be able to avoid liquidation if lender is happy to take that risk.
Gotcha. And then I guess the other question that, now again, thinking from the lender's perspective here, he will probably think, I've got to place a bit of trust in Debifi's execution here, right? Because let's say the price hits a certain level, I'm placing a bit of trust in your, let's say, your execution engine to kind of do the liquidation or whatever if they've set certain percentages. So can you just explain a bit how that works, at least at the Debifi platform level?
Well, it's like it's a technical. I mean, we use a very robust price oracle. First of all, that's a crucial and important. Anything that goes with the lending, you need to have a strong price oracle, and we use it. It's a public information. I think we use multiple. It's 12 or 14 different exchanges in the world.
Like, and you take like an average of those,
yeah, and we take average. So in case one of them having some issues, it's not going to impact the liquidation cycle because it's just one. So only if there's like a massive price action and there's a consensus amongst majority, then it could happen. I mean, liquidation. And then again, as I said, even if you're liquidated, it doesn't mean that collateral left the escrow already. It usually requires a certain action from the lender perspective. So you need to go online and sign the release transaction. So there's always a room of renegotiate the terms.
Gotcha.
And everything else is happening automatically. So as soon as the margin call, the final margin call hits, we move the contract in the stage of liquidation, which means that at this point, borrower doesn't have any option to sign or press anything, but you can chat through the contract chat and you can just try to negotiate with the lender. But again, as I said, and I'll continue saying, there's no magic pill or there's no magic stuff happening. It's a market. It's a lending market. You can be liquidated. So you need to do your own risk management. And I always say, if you're considering borrowing, never borrow against all of your Bitcoin, borrow against part of it, because you might need the second part in order. There's huge volatility and huge price action. You want to avoid liquidation, so you can put a bit more to the collateral and rebalance LTV, which happens automatically on Debifi because you can send a bit more Bitcoin to the same
address, right?
Yeah, and our system will rebalance LTV automatically.
We'll okay, look, Stephan, you put more collateral in, therefore now your LTV has come back into the safe range or whatever.
Yeah.
Okay, and now another question now, if you're on the lender side of the house here, let's say you are a person who's borrowing against Bitcoin for living expenses. Now, that person may want to keep rolling it over, right? So let's say at the end of that 1 year term or 2 year term, he might want to do another 1 or another 2 year term for a larger amount or whatever. Can you explain how that would work? Like, does the platform have that, or is it more like a manual thing that the borrower would have to find an offer to do a rollover?
You can just first of all, you can just send a message to contract chat to the lender. In fact, we have a contract chat available through the website, but it's going to be available through mobile app next week. So again, on the go. Right, you can just send a message saying, "Hey, I would like to, roll over." So we allow rollovers, and that's actually happening quite frequently on Debifi. What we're gonna do, we're gonna build a bit more features for the borrowers. So first of all, there will be an opportunity to automatically request a rollover. So you just press a button, and lenders notify that, hey, there's a request to do a rollover. Secondly, as I said, and there will be more and more underlying features if your lender says like, hey, I'm not going to do the rollover, then we will be able to find you another lender and just allocate your offer in our internal lender list. So it's going to be like fully automatically. Then, as I said, it's going to be 24-month period. So, I mean, I envision there will be a bunch of lenders that will be able to offer 24-month period. So you don't need to actually to do the rollover after 12 months. You just continue, your contract. And then we also building a feature which we are calling it's like counter offer, where borrower can find an offer on a public offer list, and maybe he doesn't like duration, or maybe he doesn't like the LTV ratio. Then you can just make a counter offer to the lender, and if lender agrees, you get your deal. If he doesn't agree, we're gonna publish your offer and send it across the board to other lenders. So maybe some of them will pick it up.
Oh, interesting. Yeah. So in a way, it means maybe you're not as let's say captive to one particular lender, that you can sort of like in a way that kind of helps the market be a bit more, let's say, competitive. As opposed to kind of being stuck in with one particular lender. So that one particular lender. So interesting dynamics there. So I guess final question: where are you looking? Where do you think this goes? I think there has been a lot of growth in this whole Bitcoin borrowing market in this year. Basically, that's what I'm hearing when I talk to people. So where do you see it going over the next 4 or 5 years? What's your prediction of how big this market gets, or anything like that?
I mean, predicting the market size, I think it's going to be really huge. And I think any prediction that you're going to make now, as it was with Bitcoin, it's just going to outperform any type of prediction. So I think the Bitcoin lending market will eventually become large, very large. It's super huge, because it's a perfect storm in a way that, again, you have the super collateral, which is highly liquid, tradable. You can liquidate at any point of time. It's decentralized. It's fully transparent, and you can build a lot of interesting tools in a way, like custody and et cetera, and transparency as well. I think there will be definitely number one prediction: the rates will go lower. Maybe it's not going to happen like instantly. Maybe next year or next week, we're going to see some bear market, and the rates will stay the same, because there will be like risk will increase. But eventually, if we're talking about 5 to 10 years, I think rates will go lower, and we'll see single digit rates. And we will see single digit rates, not for the large whales who want to borrow 5, 10 million, maybe hundreds of million. We're going to see large single digit loan rates even for smaller loans, like 5,000, 1,000, I don't know, 10,000. And I think definitely the non-custodial space will grow, and the multi-sig based lending will grow, and it will outperform again any type of expectation, because infrastructure is there and it's being built. We are moving with Debifi really fast, and I think more and more TradeFi or more and more custodial lenders will start offering non-custodial feature to their customers, because we have some of the custodial lenders that coming to us and saying, hey guys, we have these custodial lenders, custodial services, people custody Bitcoin with us, and they are, and they are like borrowing against it. But we see that there's a huge part of the community, huge part of our potential customers who don't want to use us for the reason because we custody their Bitcoin. They want to use something that you guys did, and effectively they're ending up talking with us how we can provide infrastructure.
Right. They might sort of white label your platform and have it inside of their app and things like this.
They will do that, because this is also the path we're moving into and direction we're moving into. Because again, we are lucky that we're not liquidity provider, we're just technical provider, and we can be very flexible on the way what we build, how we build, and to whom we're building this stuff. And I think that at some point you're just going to see multiple custodial platforms offering non-custodial services. Hopefully most of them is going to do this through Debifi. Because again, we're not competing with them. we're not trying to get your customers. We're offering an extra service, an extra feature that would just going to bring you more and more customers, will make you more and more money. And effectively, it's going to just open a new markets for you. Because again, we did our research year ago. We've asked 300 Bitcoiners a simple question. If you're going to borrow, you have two options. What options you're going to choose? One option is like borrow with 8% interest rate, but you're going to custody your Bitcoin with a custodial service. And another option was borrow with 11%, but custody through multi-sig. You know what? 90% of Bitcoiners said, I would prefer overpaying for that loan, but having a certain level of control and borrowing through multi-sig. So that's how much of customer you're missing if you're a custodial service.
Yeah, people are willing to pay a lot more for it. And I think it's interesting to see the evolution of this because, a few years ago, obviously, the Celsius and the BlockFi and the FTX and the Grayscale stuff, all that stuff, 3 Arrows Capital, whatever, you name it, that was very top of mind for a lot of people. But I think now there's so much excitement as we kind of come back to the beginning of this conversation, the treasury companies and lending. And why is that? Because Bitcoin is growing massively. Like, at current on Power Law, it's like 40% at least, this year. Obviously, it's coming down over time. But if Bitcoin is growing at, call it 35, 40% a year, and people can borrow at like 12%, it doesn't take a genius to figure out that there's a business model there. And that's why there's so much excitement. Now, of course, listeners, don't get wrecked. Be responsible. Don't borrow against your whole stack. You should be conservative and think about, what is your income? What is your net worth? What's the percent of your coins that you would be willing to, do this kind of thing with? But the way I'm seeing it, it can make sense, but you have to be prudent about it. But I am obviously bullish on this whole sector, let's say. And I think you're right that the lending market is going to grow dramatically over the next 4 to 5 years. So I think we'll leave it there. Listeners, check it out. The website is, let me get it. It's debifi.com. People can follow Max. I'll put the links in the show notes. Max, thank you for joining me today.
Stephan, thank you very much. Pleasure to talk with you. Pleasure to see you in Riga. Cheers. See you soon.